Dear clients, my name is Joshua Tan and I'm the strategist at Phillip Securities Research. In our last video on the 15th of July, we said that although we believed stocks wanted to grind higher on continued global recovery, certain macro event risks, namely Eurozone debt, caused us to recommend a defensive stance with regards to stocks. This advice was reasonably accurate in view of the sell-off in August. The situation in the Eurozone has deteriorated further. The scheduled meeting between the IMF, EU and Greece to track Greece's progress in meeting deficit reduction targets was postponed unexpectedly for 10 days. It was a signal to the markets that the likelihood of Greece not meeting the targets was high, in which case it would have to default. Despite recent positive assurances from the leaders of France and Germany that Greece's future is in the Eurozone, credit markets remain skeptical, having continued to price Greek debt at levels that signal a default is imminent. At the same time, some measure of systemic risk is being reflected in financial markets as LIBOR-OIS spreads have been climbing, indicating that banks are increasingly wary of lending to each other. Indeed, short-term US dollar financing for European banks has been freezing up as money markets withhold dollars. In view of this, the European Central Bank has coordinated an effort with the Fed, the Bank of England, the Bank of Japan, and the Swiss National Bank to provide European banks with short-term US dollar financing till the end of the year. The ECB move sparked a relief rally in stocks globally, but we are skeptical of its sustainability, as what is needed is for Greece to either meet the deficit targets or have its debt restructured, both of which are an open question. Tonight, Greece has a scheduled meeting with the IMF and the EU to judge whether Greece has met its quarterly deficit target or not. In the event that it does, we may see a relief rally. As to whether it will last will depend on the manner in which the target was met, as sustainability is the key. Markets will want to know as to whether Greece will be able to meet its next quarterly target, even if it passes this one. As such, we still recommend caution with stock for the time being. Thank you for watching, and tune in next week for PhillipCapital's Market Watch.